Good day, everyone. This is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. Good morning to one and all. Let me display the slide. Asian session live market analysis on April 20th between 5 and 5:30 GMT. This is a simple market tracking technique using the live market code page. I'll give the link for the same. You can open it in a browser. Now you can see currently Euro is trading 1.348082. The low is 13467. The high is 1.3501. The net change is 7 pips negative. So you find that the market is in a subdued condition after gaining the levels after gaining the levels, and there was a drop before that yesterday in the name of Goldman Sachs. Then subsequently in the case of GBP 1.532327 or the call, then 1.5317 is the low, 1.5340 is the high, net change is 12 pips negative, and you can see the spread is highly narrowed between the low and the high in the case of Euro as well as GBP. And in the case of USD Yen is also about 29 pips spread between the low and the high, but the net change is 23 pips positive. So after yesterday's close, USD Yen has gained the levels. So overall, you come across here in these three that USD gaining moves. Then in the case of CHF, 1.0635 and 38 are the current level. Then 1.0626 is the low, 1.0645 is the high. The net change is 7 pips positive. Again, a narrow range spread is seen between the low and the high during the Japanese session. And in the case of Canadian dollar, 1.0128 and 1.0132 are the current call, then 1.0124 is the low and 1.0152 is the high. And in the case of Canadian dollar, we know that people are expecting a deep level below that of the parity, but it has gained the levels and it has come to that level of above that of parity and even 100 pips higher. But the net change is 13 pips negative. And in the case of Australian dollar, 43 pips net change is seen because Australian session is very active now. So 0.9281 is the current level and 0.9239 is the low, 0.9288 is the high. The spread is somewhat around 50 pips and 43 pips gain is seen from that of yesterday's close. So as usual, Australian dollar is leading the rally and it will lag behind later on. So Euro and GBP are expected to gain the levels subsequently as the USD gaining or USD losing move. So we will analyze it with regard to the forecast and also the initial lows and the high set for the day. Let me fix the camera over that of the PowerPoint presentation and explain the forecast. During the Japanese session, swing and slide moves are expected in the case of Euro and GBP, and subsequently during the European session or before the start of the European session, there could be a dip and then subsequently firming up moves are expected. And during that firming up move, they could cut the high and go above. And during the US session, Euro and GBP are expected to again swing from that of the high to the middle level and then gain further level during the day. And it may appear that market is very uncertain, but the players are very certain because you know that yesterday after the weekend Goldman Sachs episode, the market reacted initially and subsequently the drop happened during that of the European session. I made the mention in the blog that still the players are having a full control of the market, and because they have been showing the contrarian move, dropping Euro and GBP as well as USD Yen, and market was not in euphoric condition, only that euphoric condition was created among the traders and subsequently Euro and GBP gained the level. So this is how the uncertainty will be created in the market from time to time using various episodes, and ultimately the players will have the full control of the market, and you have to keep that in mind and then trade accordingly. And obviously, you can cautiously trade, and in that process, you can use a specific trading strategy of using a stop or the hedging order, and then try to keep stop at entry and remove the hedging order or the stop to limit out your loss. And that way, you will be able to gain significantly during such volatile moves in the market. And market is known to make uncertainties or known to react to that of uncertain condition. And you have to find out what is the hidden agenda of the players and trade accordingly. And if you try to compare that of the daily swings with that of the long-term calls, then obviously you may come across a lot of uncertainties and confusion. And try to aim your trade to close it on the same day, then you will not come across that sort of uncertainty. So this is what I like to mention here. And many of the traders, they ask for the long-term calls and invariably get struck with it of the intraday trade, and that creates more and more of uncertainties among the traders. So you have to get rid of that uncertainty only by your trading decision. Otherwise, keep away from the market and just watch how exactly the market is making a move, or do a mock trade and see whether your reading are correct. And this way, you will be able to reduce your uncertainty rather than committing a position. Then later on, thinking about which way the market is going to move, and that can create more and more of uncertainty when the market moves against you. Then with regard to the intraday initial highs and the low, euro is formed with a low of 1.3467 and the high is 1.3501. You find the initial spread of yesterday and today are the same, and yesterday they went to that lower level to that of 1.34 area and subsequently gained the level. But ultimately you come across only 100 swings in the market, and not a very healthy sign, because the market can continue to make swings, but it has to make the trending move either on the upside or on the upside in order to create momentum for the market. Otherwise, the market momentum will be lost. Then in the case of GBP, 1.5317 is the low, which is slightly higher than that of yesterday's initial low. Then 1.5340 is the high. So in the case of both euro and GBP, the initial lows and the highs have not been breached. So market is showing a more of a narrow range swing currently. Then in the case of CHF, 1.0626 is the low, which is intact. 1.0645 is the high, which is also intact. Then Japanese yen 92.40 is the low, 92.69 is the high. And if you see that market is again consolidating around this 92 area, it has USD yen has fallen from that of 94 area to 91 area briefly yesterday, and everybody thought that it is a risk aversion because of that USD yen is gaining, and again you find that USD yen was losing, and now you come across USD yen is gaining again. So in the case of Australian dollar, 0.9239 is the low, which is higher than that of yesterday's low and also almost around that of yesterday's high. And the new high has been formed 92.87 for the intraday, and now they cut the high by 92.88 is the high. So you can understand that whenever they make 1 pip cut and hold near that, then they wanted to make the move in that particular direction. So they cut the high, they are expected to gain the level. Dips or buy opportunities in the case of Australian dollar. Then in the case of Canadian dollar, 1.0134 was the initial low, and subsequently they formed a 10 pips lower, another low 1.0124. Current low is 1.0124. So you can understand that they wanted to cut the low and go to that level of 1.01 area, probably a brief downward stop and below that, and then subsequently gain the level to go above that of the high. So the net change is also 10 pips negative. Then Australian dollar gained about 40 pips. Canadian dollar net change is only 10 pips. So the downside is limited in the case of Canadian dollar. So around 1.01 or below that 1.01, one could initiate the buy position. So these are all the initial lows and the highs set for today. When compared with that of yesterday there was an euphoric condition or an uncertainty, but the market reaction was very less. Uh, when compared with that of similar reactions we have seen earlier again. When any case is being filed against any of the institutions, immediately the market used to react in a very aggressive way. Whereas yesterday, due to low volume, it was making only about 100 to 130 pips drop. And only in the case of GBP, they made a quick drop. And that created the sentiment. Other than that, all other currencies were in the range bound swing. Because of the drop in the case of GBP and GBP Euro GBP has gained from that of 0.87 to 0.88 area, and again Euro GBP is expected to make a brief upward stop on above that of 0.88, maximum probably about 0.8822 or 0.8837, and then subsequently it is also expected to make a drop. And Euro CHF is another current draw which is also attracting a lot of attention nowadays because it is trading around the area of 1.43 to 1.44 level, and it is expected to gain the level from today. As you notice that euro drop when it is about 12 pips, USD CHF gain is about 10 pips. So it is coming closer to that, and which will induce euro CHF to gain levels during the day. Then in the case of the yen crosses, on Monday, on Friday as well as Monday, there were visible drops in the case of yen crosses, euro yen and GBP yen. Subsequently, today, they gained the levels to start with, and near the low, one can initiate buy position. And always in the case of crosses, yen crosses and yen, keep that in mind that they continue that move for about 1 or 2 days. So they don't stop with one day. So they do it in the subsequent days and then reverse. So one-sided move it is referred as. So keep that in mind that they had finished their downside move and they wanted to make the upside move now after accumulating buy positions at a lower level. And so small dips, don't try to do sell and buy trades, and you can try to do buy and sell trades. Small dips you can initiate the buy and limit the risk using the stop or using the hedging order. Then when they gain the level, keep stop at entry and try to maximize the profit. And again USD yen is expected to go to that level of 94 to start with. Then 97 could be seen very soon in the case of USD yen, and people will be surprised why it is making such a move. And you know that yesterday is a typical example when the currencies as well as stock markets were correcting as the risk aversion. Earlier occasions you would have noticed that gold used to gain level, whereas yesterday gold also corrected. So if you think that because of the risk aversion only US dollar has to gain, then it is not a unwritten condition, and the conditions can change depending upon the player's tricks. So don't immediately refer to that as the past and think that okay, whenever there is an uncertainty, US dollar has to gain in the name of risk aversion all the time. It is not so. So they can simply change the scenario and try to give different type of attributes, and probably we would continue to believe such attributes because we won't be knowing what has actually happened in all these conditions, and only the interpretations we come to know about it, and only the limited interpretations are being revealed. So we have to keep in mind that they are only to convince the traders to that of the type of moves what are shown in the market, and nothing more than that. And the sentiments are short-lived, and so don't think that this sentiment will be carried forever like this, and they will try to change the market sentiment and try to trap the traders and earn the money from the trade. So this is the objective of the players. We have to understand that. So don't become influenced by such attributes which are given in the market from time to time. So let me minimize the PowerPoint presentation and take up the questions which are asked here. Meanwhile, I'll focus the camera over the top of the live market code page so that we will be able to review about the current market condition from time to time if needed, whenever there is a quick move happening in the market. Then Smith has got a question. Uh, do you think that the GBP, USD yen and Euro yen will cut the daily low today before the rise? So if you see in the case of Euro yen, the low is 124.62, the current market level is 124.73. It's hardly about 10 to 12 pips away. The net change is 10 pips positive. Probably they may drop another 10 to 12 pips in the case of Euro yen and then try to gain the level. And in the case of USD yen, the low is 92.40. The current level is 92.57. So 17 pips higher. Probably during the session change, they could make a downward stop and below that of the low and then subsequently gain the level. Then Arun. In your yearly forecast webinar, you said that the traders can buy GBP and Euro at prevailing market rates of 57 and 43 and exit in April and re-enter in July. Yeah, that was a long-term call and subsequently, you know what had happened in the market. Euro and GBP corrected and that is the call I had given. Along with that, I also given the trading strategies. You might be remembering it. Don't take only a part of it and try to ask me the question. Also, I said that use the hedging or the stop to limit the risk. Okay, if you have used it, then obviously in your sell position, the hedging, you can simply wait and see how far, keep stop at entry in the hedging and see where exactly the market is going and subsequently book profit in the hedging or cut the buy position and maximize the profit in the sell position. These are all the other trading strategies one need to understand. Expectations are expectations and expectations need not turn to be a reality 100%. So that you have to understand. Anyhow, I'll be reworking on the yearly forecast and I'll present it in the month of May or June, the review of the yearly forecast and give you the modified forecast for the rest of the year. Because see, there are various factors which can influence the market. One is the cash flow, the other one is the trader's participation. See, the cash flow has also come down and if you come across in a year 2006, 2007, 2008, the cash flow was simultaneous in all the three markets, currency market, stock market as well as commodity markets. That is why whenever you come across Dow is rising, Euro was rising and gold was rising, that sort of scenario was seen. Now you come across a different scenario wherein the money has to flow from one market to another market. That means the limited resources are available for the market manipulation. As a result, the big players are not risking too much of money pumping in all the markets because of that less of traders participation. When the traders participation come down, obviously there is no big deal in making up and down moves in the market. It is not a game for them to make such moves and it is an earning process. So obviously when the earning potential is not seen, then the players will not pump in more money. Then secondly, you have evidentially seen that even during the great event times, the market is not exhibiting spikes. And probably in 2006, 7, 8, whenever a small breakout news comes, the market will make a spike of about 150 to 200 pips and things like that. And that has become a history now. And the market is not at all showing spikes and it is only gaining about 50 pips or losing about 50 pips. That sort of moves are seen within a session. And that shows a limited volume of traders' participation in the market. So, what I have given with regard to the yearly forecast is only one portion of it. The expected market moves of the expected market moves for the year. There are other things, namely the trading strategy and also the currency conversions, etc. And they are also taken into consideration in order to have a good benefit out of such market moves. So the long-term forecasts are meant for not small traders. They are meant for the institutions, and thereby the institutions who can go in for such currency conversion. And in the currency conversion, I always advise the averaging technique. So it is not one level. If it is given immediately, all the currencies are to be converted in that particular level. They have to spread the risk. So besides diversifying the risk, the institutions normally go in for a diversification of the risk. Besides, I also give them the ideas how to go in for spreading the risk. So if one can do and sustain that sort of trade, and definitely they will have 100% profit in the market. Then Sivaraman, will USD CHF gain above yesterday's high? Yeah, USD CHF has gained the level to 1.08 and come down to 1.06 level, and it might make a brief downward swap and again gain the level. So it can come up to 1.07 area. Then GBP has Smith as corrected. GBP has cut the early low by a few pips. That can be a good level to initiate a buy. So in the case of GBP, as I explained, that initially they will make a small dip in the case of GBP in order to gain the levels in the case of Euro GBP. So Euro GBP can go to that level of 0.8822 or 0.8837 and subsequently drop. For that, they have to hold Euro and drop GBP. Then subsequently they will drop Euro, and along with that drop GBP also, and then reverse. So at that time you will find that GBP will be gaining the levels, and now you find 1.53 area. So they could drop another 50 to 60 pips from that quickly and then gain the levels in the case of GBP. So 1.5250 would be the approximate level. Yeah, Euro and GBP making the slide now. Yeah, I have been explaining that during the Japanese session, they are expected to make the slide to a close and then make a downward stop, and during the gap time before the start of the European session or during early European session, and then gain the level. Then drop. What is your expectations of GBP this week? See, now everybody is talking about UK election on May 6th, and one has to keep in mind that till election, so we are on 20th, we have another 10 days in this particular month and also 6 days, then afterwards the announcement of the results and the formation of the government, etc. So that will be the uncertain period, and during that they can easily create rumors and make spikes in the market if the volume is good. So don't think that from now onwards they will be simply holding GBP. They will be using different stories. They can talk about US stories and gain levels in the case of GBP. Again say that okay, that the hung parliament might be seen in the case of UK, so GBP could drop. So every time they will use different stories. So if you tend to believe that okay, all the stories are real, then whenever they want, they will release the stories or recollect the stories. So that you have to keep it in mind. So GBP will be active, and even till election and even after that election, and that is the only currency with which they are able to create the market sentiment. They will not just like that leave it untouched. So you do come across a downward stop and as well as upward stop in the case of GBP even today and all the days. Then for USDN, do you see more drop than rise? How low do you see? See, USDN, it has formed the low 92.40, as I explained, that it could make a brief downward stop and below that. Then 92.10 or 92.15 could be a buy level, and if it is shown, then probably you can keep stop at entry and try to maximize the profit. Then GBPN expected to go higher? Yes, GBPN is expected to go higher. GBPN, the low is 141.67 currently, market is trading around 141.7885. So that change is 9 pips positive, and in the case of Euro Yen is 13 pips positive. So they can briefly take it to that of the negative territory, like about 20 to 30 pips net change negative, then quickly gain the level. I miss your earlier comment on Euro, USD and GBP. Yeah, Euro and GBP are expected to make the slide during that of the Japanese session, and after lower level swing, they are expected to gain the levels during that of the European session, and during European session, we could see that they are breaching the high which is set now, 1.3501 in the case of Euro and 1.5340 in the case of GBP. And then subsequently, US session some volatile moves and then further gain. So all will be wondering, this man is talking about the gains where the entire world is talking about the drop in the case of Euro and GBP. So you just see how exactly the players create market sentiments and act against the traders. Then balance. Why is it when the market open gap up or gap down from the Friday close on Sunday, does the gap eventually always fill? There is no need or there is no guarantee that they need to fill that gap. And invariably what happens nowadays, because of thin volume conditions, they accumulate the buy positions on Friday, then Monday they open higher and start booking profits straight away. Because if they gain about 200, 300 pips and traders are keeping away from that other market, they are not committing either a buy position or a sell position. So they only gain about 50 to 60 pips during the gap time and try to book profit. In the process, what happens? It tries to fill the gap. So whenever there is a low volume condition, this sort of filling of the gap could happen. Otherwise, it is not necessary to happen like that. And whenever they don't fill the gap, you find shift in trading zone. If they fill the gap, the trading zone will be range bound. Then rather, we could expect a big drop in GBP. I explained that the GBP could make a drop about 50 to 60 pips, then subsequently gain the level 50 to 50 to around that could be a good buy level. Okay, Arun, why Japanese yen did not sustain above 94? No, it was sustaining about 94 for about 3 days, and afterwards the traders found that the resistance has become a support. Technically, resistance has become a support, and all the people started giving that forecast that USD yen could gain further up. So readily, traders thought that instead of trading in Euro and GBP, they had taken the buy positions in the case of yen and yen cross. And players have shown on Friday and Monday the downside of those currencies and induced them to exit out of the positions, and subsequently they gained the level. So this is how the players know very well how when they make the moves in tandem with it of the technical expectations, the traders will easily participate. Even then, the good volume of participation is not seen. That is why you did not come across big drops in them. And to drop about 100 to 150 pips, it took 2 days. And you know the daily potency in the case of Euro is about 150, GBP is about 250. And you know, yesterday it was really a fundamental news that a financial institution is in problem, then market could have easily corrected about 250 pips, whereas it has not done that. So even on the downside, market is not showing or taking the full spread. So Arun, USD yen is expected to go above that of 94 to start with, then 97 you should be seeing. We could be seeing by early May. Can Euro decrease to drop when GBP and Euro have the downward stop? So as far as the downward stop in the case of Euro and GBP, they need not do it simultaneously. You would have noticed many of the occasions they do the downward stop in the case of GBP during the Japanese session, and During the end of the European session, they make a downward stopper in the case of euro. If you are able to understand the patterns of the moves the players are making, then you can easily predict the market on your own on a daily basis and take the positions accordingly. So they are not making simultaneous drop in the case of euro and GBP because they wanted to exit out of euro GBP positions which they accumulated in enormous quantity. Then can it increase after news at 1 p.m., 3 p.m., 4 p.m.? Okay. So every day you come across the data release. I am not able to understand 1 p.m. what it refers to, whether it is 13 GMT or 16 GMT and things like that, or is the London time. Probably he is talking in terms of his local time. So what I anticipate is that initial drop during the early European session and then subsequently gaining of the levels in the case of euro and GBP. Then do you expect Australian dollar and USD yen to drop when GBP and euro have their downward stop? See, when euro and GBP drop, you normally come across Australian dollar also participate in the downward move, and that will have a limited impact because Australian dollar and predominant of the occasions you come across which shows lesser drop during such drops of euro and GBP. One possible reason could be the lower volume. The other possibility could be when commodities are holding high, people hesitate taking sell positions in the case of Australian dollar. Because of that, it does not drop in tandem with that of euro and GBP. Whereas USD yen, which moves in tandem with that of euro and GBP, many of the occasions, which I explained many times, it is referred as a contrarian move. So when euro and GBP are showing USD gaining move, then USD yen could make USD strengthening move. That is just diagonally opposite, which is referred as contrarian move. So that sort of moves you would have noticed yesterday when euro and GBP are dropping, USD yen was also dropping. Then I made the comment in the blog that still the players have got very much control over that of the market. Don't think that they are exited out of the market because they are only capable of doing such type of contrarian move. Now you come across the euro and GBP are making a dip and USD yen is making a gain. So which is USD gaining move. So from that of USD gaining move, they make it as a contrarian move. Then again USD losing move and again a contrarian move. This is how they alternate their moves. So we have to understand the type of moves they make in the market in order to read or in order to envisage what could be the next move in them. What could be the low and the high in the case of GBP this week? So GBP, the low could be around 0.5 or 1.52. The high we could be able to see around 1.55 to 1.56 because unless and otherwise the volume improves, we are not going to come across a very big upside or the downside moves in the case of these currencies. Then Jason, do you think that USD CAD has formed a yearly low? Yes, USD CAD has formed a yearly low, but still they will try to make a downward stop and in the process they may go to that level of 1.0050 and then subsequently gain the level. Whenever you come across a very quick drop in the case of USD CAD, and try to buy rather than trying to simply follow the chart and trying to take a buy around the support. Then if we keep the stop below that of the support, obviously they will fill your stop. Then which one moves euro market the most? The euro USD spot, euro futures, or the euro dollar futures? Which one? So as far as market moves are concerned, initially the players make up and down moves. wherever the traders take positions, then to encourage the traders, they try to make a slightly a wider move in such regions, whether it is a spot or in the futures or currency conversions or whatever it is. Then, so initially they will attract the volume. So in order to attract the volume, they will make move. Then subsequently to trap the traders, they will make opposite. So this is day in and day out, they do this. And if you think that, okay, whether spot market is responsible for euro rise or futures market is responsible for euro rise and things like that, you will get only confused. And that may not help you in any sort of trading decision. So ultimately, what you have to realize is, if I do a buy, will it go up? If I take a sell position, will it come down? That sort of certainty you require in order to make effective trading. And this sort of certainty, in order to arrive at the certainty, you go backtrack. And in that process, you continue to backtrack and miss the present. That is what happens for most of the traders. They miss the present and talk more about the past and more about the extreme futures. That is down the line 6 months or down the line 7 months and 1 year or the next quarter, etc. But what sort of trading decision I am taking now in order to earn something from the market? That is more important. When you become more and more uncertain with regard to the current market, then you tend to talk about the future or tend to talk about the past more. Okay, which one is most liquid? Obviously, the spot market is more liquid. Futures market or the derivative markets, they are otherwise known as derivative markets. They are derived from that of the spot. All of this range-bound market instead of shift in trading level is what you foresee for the next days. No clear trending. See, unless and otherwise the volume improves in the market, the players will not be able to make any significant move, because by making up and down move, they don't gain anything, and they want the traders to participate. So earlier they have been making an extreme downward move. They found that the volume was dwindling. Then obviously they have gained the levels. So Euro and GBP are not in the extreme levels, but very close to extreme levels. When they are very close to extreme levels, still people are afraid to take positions. And they have taken Euro to 1.36. And a lot of people have taken buy positions at that time. So they have made use of the news and dropped on Friday itself. And so afterwards, Saturday, they flagged up the news, and subsequently on Monday, they made the drop. And again, yesterday during US session, they gained the levels in the case of Euro and GBP. So you have to understand that how players are mainly trying to trap the traders and earn their money. So that is more important for us to understand. So in that process, we should avoid getting trapped. If you think that because of X, the market is going up, because of Y, the market is coming down, then obviously on certain other time we will come across because of Y the market is coming down, because of X the market is going up, or even sometimes because of Z the market is going up and things like that. So ultimately you will never be in a position to conclude whether the market will be able to go up or come down. So that is why I have given the very simplest or the easiest way of reading the market. So from the start of the market, watch the market for 30 minutes. And during the 30-minute process, if you watch in the live market port page, when the market is near that of the high, suppose Euro is near that of the high 1.35 and not breached the level in the first 30 minutes of observation, then try to take a sell position, you will be able to get a swing trade profit over 30-40 pips. And when it comes to that of the low European session, and when the low has not been breached, or in case if they make a downward stop and below that of the low and come above that of the initial low 1.3467 in less than 30 minutes, that is by before 8 GMT, and sustain there till 8:30 GMT, even if there is a data release by 9 GMT, you can try to take a buy position and see definitely when they have finished the downward stop and before the data release, understand that they wanted to make a rise. And if they make a false move before the data release, the false move if it happens to be a drop, then after the data release they wanted to rise. So they have a definite pattern of market moves. We only fail to understand. Instead, we give importance to the data. They are giving importance to the data as a trigger time. Nothing more than that. Then afterwards, if they make a false move or a downward stop, if you try to take a buy, and I defined the stop end that they go below that of 1.3467 is the low, say 1.3437, then 30 pips below that of the low, and subsequently gain the level to 1.3467 in less than 30 minutes and stay above there for 30 minutes. That means 1 hour of observation. By 8:30, 9 GMT, if they don't go below that of 1.3467, then try to take a buy position. You will see that it is making a definite profit. So, watching the market during the session start and session time will help you to understand the market moves for that particular session. Whether there is a downward trend in that particular session or an upward trend in that session, and if there is a 30 pips profit booking opportunity or 20 pips profit booking opportunity or 50, 60 pips profit booking opportunity, you will be able to easily study between understanding the spread between the high and the low. Now the spread between the high and the low in the case of Euro is about 34 pips. So you should be able to get about 25 pips when you take a sell position near that of the high. When the spread becomes bigger, like 70 pips, then if you try to trade during that, you will be able to at least capture 45 pips. When the spread becomes 150 pips, and if you try to take a sell near that of the high or a buy near that of the low, you should be able to capture at least 75 pips. So this you should be able to understand if you want to do an effective trading, rather than trying to find out that the data are very important and they are only driving the market. And the data release times are used as trigger time by that of the player. And yesterday they have been talking about Goldman Sachs, and now they will simply talk about some other news and rig the market. So you won't be knowing at what particular time they are going to talk about a specific event. Then again day after tomorrow, they can talk about Goldman Sachs. So that is how they have been doing. And you know the story of Greece, how whenever they want, they can track the story and talk about it. Then notice that GBP opened Sunday 125 pips lower than Friday close. Why did that happen? Should I buy on that drop? Yes, obviously you can buy on that drop. And see, as soon as you buy, if you think that you have to get immediately the profit, then what you have to do is you have to follow the trading strategy that when they had dropped about 125 pips, then obviously see the next session whether they are dropping further down and the three levels of drop, because this is an extended move, extended downward move, there will be always three levels of drop. When the third level of drop is over, they will stop cutting the low for more than 30 minutes. Then you try to take a buy position. Just because 125 pips drop has happened, if you try to buy, then that is the first drop. Obviously, you will be stopped out. So you have to wait for the three levels of drop. Then they have finished it. That means the third level, traders have developed the tendency to sell at the lowest level. That is the third level of drop. For that, the players drop the market and induce the traders to sell, then accumulate all the sells. They buy, and whenever the market is dropping, and even like yesterday's uncertainty, whenever the market was dropping, nobody questions who is buying at the lowest level. And is he a fool to buy at the lowest level? Nobody questions that. And today you know that, okay, they were the wise people, they bought it and subsequently gained the levels during US session and exited out of their buy position. So they are effectively doing the trading, buy at the low and sell at the high. Whereas we are the one, we buy at the high, during the rise we try to buy, and whenever there is a drop, we become upright and liquidate the long position. So that is emotional trading. So you should get rid of the emotional trading, only then you can be successful in the market. So let me go back to that of the PowerPoint presentation. The forecast for today: Japanese session swing and slide, European session slide near that of the low, or just a downward stop and below that of the low, and then subsequently firming up move, then swing and firm up move, or the rise is expected during the year session. So I take this opportunity to thank everybody who have come here to listen to my talk, and I will continue to give the forecast in the blog today and take up from there, and any update is required, I will give it and answer to further questions in the blog. And tomorrow again we will meet for yet another session of live market analysis. Thank you for your presence here. Thank you one and all.